What is up, guys? Norse Digital Assets coming at you with another video. In this video, we're going to take a look at Bitcoin. I've got a really good video lined up for you. If you're going to watch any of my videos coming out in the next week or two, this is the one to watch. I've basically been doing some studying on some stuff since I woke up today, so I've got a lot of stuff to show you that's pretty good. And it's, what is the market going to do? Is it going to shoot up wave 5, or is it going to go down? We're going to take a look at that. And we're going to take a look at the riddle of Wave 4 and Wave 5 that no one seems to be able to solve. You have El Capo, Incredible Crypto, with two different viewpoints. You have my viewpoint, and I'm going to show that to you. Thank you to all the subscribers. I think I got like 2,700 and some subscribers. Thank you to all the subscribers. Thank you to the people that are still following the channel, even though the market has been ice cold for a while now, but it is a major mistake to stop paying attention to the market now. Now is the time to pay attention. We're going to look at a lot of really good stuff. So first and foremost, we're going to dive into the Bitcoin chart, since Bitcoin leads the market and all the altcoins. So number one here, I posted this on Twitter. We have this ascending triangle here. When you come into this triangle, you have this A, B, C, D, E. When you break above, after the E, typically, when you come out of this triangle, you break above it. You confirm it here with this daily candle. You've confirmed that the target of this triangle is just the measurement of the height of the triangle when you fell into it. So I just took it from here and I set it here, and it's around $26,500 per Bitcoin. I posted that on Twitter. I will say there's like 3 or 4 other indications that say 26.5 is the next target for whatever reason. The BBWP combined with the stock RSI all takes you to around there. But let me turn on the VPVR and I'll show you that it'll possibly be around 28. And this is what I was showing on Twitter. Stretch this out sideways. Obviously, you can see here where I have this red arrow, you can see the VPVR here at around 28,000, 29,000, where resistance gets really heavy. The VPVR is just a volume point where the volume's coming in from the side instead of the bottom. So the volume is anchored to the side here on the chart, and it's just showing resistance and support where a lot of volume comes in, either buying or selling, until you flip it, until you come up and come above that resistance, back tested to support. It's not support to move on. So that is going to be a 28,000 is going to be 28, 29 is going to be very heavy resistance. Possibly, we'll see. Also the 26.5. So I'm assuming the next target's going to be between this 26.5 and this 28 before it might roll back a little bit. Okay. All right, guys. So the $1 million question, the riddle that no one can seem to solve. I don't think anyone knows. Okay, is the wave count like my original drawing? 1, 2, 3. This is a massive 4 correction. Then you're going to get 5 into this range. Is it that? Or the other side of the token is this. The other side of the argument is this. 1, 2, 3, 4, and we already had 5. 5 being here at 69,000, 3 being here at 64,000. Now, this is what El Capo is saying on his Twitter. Now, also, I took a look at his drawing earlier. I measured this. This is his 1, 2, 3, 4, 5 wave count on this 4 to 5 up to 69,000. This is 1, 2, 3, 4, 5. I said major flaw in your logic here. Your 1 is 80%, yet your 3 is only 70%. 3 is always largest. 1 cannot be bigger than 3. This does not even match basic Elliott wave theory for all the crypto capo followers out there. So that this is just, it's wrong. This is wrong. So I don't know. This needs to go back to the drawing board. Capo, Incredible Crypto, had sort of an argument there on, not an argument, but a debate there on Twitter, comparing their thesis. Anyways, to me, that is why that is wrong, his count there, okay? But we come back here. Here's the other one that I have for you, okay? If this were the case, okay, if I pull out the Fibonacci here, and this is important here, okay? If I pull out the fib and I set it here for the height of 1. So I have 0 at the bottom of the bear, and I have the 1 here at the top of wave 1. That pretty much everyone agrees that's wave 1, right? Okay, wave 3 went higher than the 1618, 162%, okay? It did. when you come here to the applying technical analysis ratios, if wave 3 is greater than 1.62 or extended, which it is, then wave 5 ratios are as follows. Wave 5 either equals wave 1 or it is larger than wave 1. It is 162% of wave 1 or 262% of wave 1 if wave 3 is greater than 1.62. It was, okay? We go back here. Here's wave 1. That's 100% of wave 1. Here is 162% of wave 1. Wave 3 easily passed that, meaning wave 5 should be at least as large as wave 1. But here's the problem with this whole analysis and why I've been saying that we're still in wave 4. Because, take a look at this here. Let's measure this. So, from the bottom of wave 1 to the top of wave 1, about 300%, okay, roughly 300%. Yet this wave 5 that Capo and some other people are calling the bears is roughly 130%. So this wave 1 is about 300 and some percent, but yet this is only 130%. That completely breaks this rule here. That means wave 5, this does not fit the Elliott wave theory, meaning we are still technically then in wave 4. And calling the bottom of wave 4 has been very complicated. So that would bring wave 4 over here and wave 5 up here. Now, let me show you something else really cool, some price targets here, okay? So why do I have these green lines in here? Let's turn off the VPVR. Why do I have these green lines in here? Because down here, once wave 4 has completed, which it may have at 17.5, once wave 4 has been completed, draw a straight line between waves 2 and 4. Here's a straight line between waves 2 and 4. So what do I have here? I have a straight line between waves 2 and wave 4. Okay, then after that, you are drawing two parallel lines here, off the top of wave 1 parallel line and off the top of wave 3 parallel line, okay? We come back here, and that's exactly what we have. We have three parallel lines and 2 and 4 and one off the top of 1, okay? And what this basically says is that when 3 is a very impulsive move up here, wave 5 is likely to end up hitting one of these lines in the zone. Expect wave 5 to end on one of the two upper channel lines. Usually if wave 3 was a normal wave, wave 5 tends to end on the channel drawn from the wave 3 top. If wave 3 was extended in a runaway type of wave, which it was, wave 5 tends to end on the channel drawn from the top of wave 1. So where would that be? That is here on this line. So for example, if I set it here in March 2023, $164,000 Bitcoin in March 2023. You want to move it a little bit? Come out here. Come into May. $188,000 Bitcoin in May 2023. It ends a little early. Let's say December 2023, January 2023, $145,000 Bitcoin in that time frame, like I've always been speaking about in the main drawing. And here's the main drawing. That's what we've always been speaking about. Now, I didn't expect it to lose this 28, and I didn't expect it to correct as deep, but let me show you what I'm looking at now. This is a little crazy, so get yourself ready for this. Okay, so this is based off the fact that the top of wave 3 was around 61,000. It was not 64,000. Why? Because, take a look at this. When you zoom in, I'm going to show you something here. When you zoom in, you see this pattern. You see this pattern that especially if I go to the daily, I'll go to the daily so you can see the pattern better. So you see this pattern that looks like an inverse head and shoulders. Down, up, down, 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 down. So you see shoulder, head, shoulder. It's kind of like a bat here, okay? That pattern. If we come over here to what is called, and Credible Crypto's been talking about this, a double 3. The double 3, this B can come up higher than this. But here's that pattern right here, the inverse head and shoulders. Down, up, down, down, up, down. You have this here. You have this inverse head and shoulders pattern. Then you have a 5 movement down to W. Then you have a clean A, B, C up to X. And then you have this complicated move down to Y, which is a 1, 2, 3, 4, 5, 1, 2, 3 back, 1, 2, 3 back up, and then 1, 2, 3, 4, 5 back down to Y. Correction is over. Okay, so this is just another part of the theory, just trying to solve this riddle, because whoever solves this riddle is going to make the most money, a crazy amount of money. So I've been trying to solve this riddle for a while now. Anyways, this here, if you take a look, there's that pattern, that inverse head and shoulder pattern. Then I have this 1, 2, 3, 4, 5 drawn in down to W. Then you have a clean, real clean A, B, C up to X, just like the drawing. And then here, the only part I don't like about here is how this 3 kind of cuts across some stuff. But anyways, after you get to X, and again, this is called a double 3 correction. It's a combination correction. Once you get to X, it is a 5 movement down, 3 movement up, 5 movement down. It's over, and the bottom is in. So let's come back here. After X, 1, 2, 3, 4, 5. A, B, C, a 3 move back up. And then the final 1, 2, 3, 4, 5 down to Y. Possibly the end of wave 4. And then what would that mean? That would mean wave 5 next, something that we've been talking about and basically waiting on for an eternity. So just something to point out for you. I have something else really awesome to show you. Let me show you Will Clemente on Twitter. In my opinion, this is the most compelling chart in crypto. This is, okay, when large amounts of stable coins are on the sideline relative to crypto's market cap, market participants have to chase the rally higher. When there's a lot of stables deployed but no one left to buy, market runs out of new buyers. So it's basically just a comparison of the stable coins, the Tether, the USDC, that on the sidelines versus buyers stepping in to buy and deploy that, okay? But basically here, and I have this already mapped out here. Let me pull it up. US, so you're going to have to put in parentheses USDC plus USDT divided by total, okay? Hit enter. Here it is. Same thing he's showing there. Basically, what he is showing in his drawing, when you hit the green, when you're hitting the green for mass amounts of stables on the side, when you hit this green line up here, that means massive amounts of stables are on the side. Usually people chase the market back and you go back towards the red line. You hit the green here, head back towards red. You hit the green here, you come back down. Anyways, when you hit that green line, the money is being deployed because they are moving inversely correlated. Down here is the Bitcoin price on the weekly. So when you hit, usually like here, for example, you hit this green line, mass amounts of stables are on the sides. As it starts to come down and stables are coming off, obviously the price is going to run up. But usually when you hit the green line, you don't just keep hitting the green line and hang out up here forever with mass amounts of stables on the side. So what did we just do? We just hit it in June, July. We've been floating around this green line here, ready to start to come back down. So in theory, buying on the green line on this USDC plus USDT divided by total, buying on this green line is optimal, which is confluence in many, many other things I've shown you, the 200-week heat map and everything. The conclusion of this video is going to be this fact. The bears, people like El Capo of crypto, however you say his name, and a lot of these other bears, a lot of these people are talking on Twitter. They are fully out of the market. In my opinion, far too risky to be fully out of the market. Far too risky. Okay, just hit that green there, looking good. Okay, obviously sell the red on this. You can type this in on TradingView. My point is I believe it is far too risky to be fully out of the market right now. I know what I'm doing. I am holding all of my coins and I am DCAing in. Let's go back to this one here real quick, the one we were just on. And I want to say this. The one that the drawing that we were just looking at, if this actually has some validity to it, which I do like it, it's pretty clean. I do like it, even, you know, with that start with that inverse head and shoulder pattern and how it all rolls through here. I like it. If this actually comes to be legitimate, people waiting for another 16,000 Bitcoin and another $15,000 Bitcoin, they're never going to get it. And they're going to have to jump in at much higher prices. I've been DCAing into this. I've been DCAing in here. And I'm going to continue to hold for another run. Because the alternative to that is, if I erase all drawings, what they're talking about is that was wave 5. And then you're going to get a 5 movement out of there. Okay, and this really isn't that bad. If it's a 1, 2, 3, and this is a fake pump out 4, and then we go to 5 down to like 14,000, 15,000, and that's the end of the correction, and that was a bear market, and then we start running, then all these purchase prices really aren't that bad anyway. But to me, there's a good chance this is not a fake pump. That yes, it might correct back down a little, but then start to move. You get those 1, 2s, 1, 2, 1, 2, okay? And you start to just move up, slowly climb up the stairs. But to me, it is far too risky to be completely out of the market right now. There's a big chance, like I laid out in this video, that wave 5 never happened, that this was not wave 5. It's too small, especially compared to wave 1, and that wasn't wave 5. And it's just a massive A, B, C, expanded flat, combination, double 3, whatever you want to call it, and like I had just drawn out with the WXY pattern. If that's the case, the market's going to start warming up here, and we're going to have a good rest of 2022, early 23, which I think is very possible, okay? Let's take a look at real quick here. I'm going to, so my point is I'm DCAing, and now I have been DCAing in over the last month, and I will continue to. And even if this is a 1, 2, 3 fake pump out 4, and then 5, and then the market's going to start going, then fine, I'll DCA in all the way down on this. But that is not, there's nothing guaranteed with that whatsoever. If we go back to here, what I had, and all this drawn out, if this is a double 3 WXY, just like this pattern here, then the bottom was already in at 17.5. We're going to start moving up and grab some nice positions, and we're going to get that wave 5, and we're going to go towards my targets that we've always been talking about. And the targets I've always been talking about are $130,000 to $203,000 Bitcoin in early 2023, late 2022, somewhere in there. We'll wait and see. We're just gonna have to keep waiting to see. Let's zoom out here a little bit. I will turn on. 2 more things to point out, guys. 2 more good things to point out here. Let's go to BTC USD. So the volume on Coinbase looks good. Let's turn on the volume really quick. Reset the chart. So the volume looks good, guys. When the volume is big on Coinbase, and we have this here, if I drop a line, that's 3 bars in a row here. Right there. Drop that in. Boom. Okay, when the volume looks good on Coinbase, so what I want to point out here is these 3 green candles in a row, volume on Coinbase. Now, Coinbase is one of the biggest exchanges, but what I will say is in the past, when you start getting these volume spikes in green from Coinbase for Bitcoin, it can signify the start of a run. It's kind of a weird metric or indicator, but it can. If you take a look at the other volume that we've had in the past, where else do you see that green volume starting to spike up like that? Okay, haven't seen volume that nice in a while if you actually take a look back. So not too bad. There is some volume coming in on Coinbase, and there's some large whale purchases. We're going to look at the heat map, and then we're going to close this video down. I need to put out some more videos here for you. So the 200-week heat map here, again, if this was wave 5 here, okay, then you topped at the end of a cycle in a light blue green color. That doesn't make a whole lot of sense. You get that color through the bear market in here at towards the bottom of a bear. So that doesn't make too much sense. Typically when there's a top, you get the red, you get all this red in here, okay? Right now we're in a dark blue state. The dark blue has always been the best time to buy. There's a dark blue there. There's a little bit of blue in there. There's dark blue now, okay? So keep that in mind. Again, just more confluence on we're nearer the bottom than a top, okay? I'm going to continue to hold. I'm going to continue to watch and wait what happens with the price action. I'll release some more videos this week so I don't have to cram so much into one video. Hope you like this video. Thank you to all the subscribers. Smash up the like button, hit subscribe, and we will see you in the next video. See ya.